Hey traders, welcome to Charts and Coffee. Great to see everyone. Happy Friday, everybody. Appreciate y'all making time for the show. We're here every weekday, Monday through Friday, 9 to 9:20, our pre-market show. And today we're, post-webinar. So thank you very much for all the emails, kind words, feedback from yesterday's webinar. If you haven't checked it out, you can still check out that webinar replay over at simplertrading.com/price. And we are going to be rolling into webinar number 2 next Wednesday, 8 p.m. This is not going to be another webinar. This is going to be really my dissecting the trades that I'm making going into Wednesday. It's going to be a very interactive Q&A session. So it's really going to be a great preparation. It's really a pre-course session as we go into Saturday, the 25th, and our big class rooted in time volatility and these HPMRs. Not to mention a lot of other upgrades to tools that we're making available as part of the entire toolkit that comes with the class. So very excited about that. If you cannot tell, totally stoked. But as always, gang, this show is about your questions. We've had a very interesting week. Looks like post Powell, a little bit of optimism, or at least a certain sense of it's not worse than we already discounted. We're in line with expectations. We're ready for the aggressive hikes. We factor those in. We've looked at the Fed fund futures, says the marketplace, and we'll take each data point as it comes. And I think we could have a very interesting end of month, which in the free video yesterday, I didn't just talk about the short term. I talked about the weekly chart too. I talked about, hey, do we have a wish list for our weekly in the midst of this downtrend? And on the daily, what could be the catalyst for a rip that we would want to get long puts and short the indices in? And then in the meanwhile, while we're waiting for those things to happen on the daily or weekly time frame, how can we use the intraday to take advantage of volatility? So all three time frames and time horizons discussed in yesterday's free video, right back on over at the Simpler Trading YouTube channel. All right, kicking it off. Hey there, Steven. How are you? Great. I appreciate that. I enjoyed the heck out of giving that webinar. And the questions you all had were amazing. It was a really fun time. We had a 90-minute discussion. Big shout out to Trish for that great slide deck full of lots of examples. Went through some of the basics of the checklist, the visual checklist on the chart. I appreciate that. An entry and exit point for DVN and OXY. Yeah, let's do it. So DVN I like. However, it's really more about, look, what's happened to oil stocks is very much reflective of the fact that we're seeing overall risk aversion. In other words, gang, we are not in a sector rotation environment. When you take a look at the sectors, when you take a look at the way, am I not logged in? Well, you can kind of see it here. Actually, you know what? Let me just log in here real quick. So when you take a look at the way that the sectors are behaving in terms of, are we seeing rotation at the top turn into upward rotation at the bottom? We're not seeing that at all. And so we're seeing overall risk appetite, broad-based risk appetite, broad-based risk aversion. And even though crude's been holding its own, even though natty gas has recovered some, or at least stabilized since that Freeport terminal update in terms of the closure, we have equities, again, just getting hit with that flush that we're seeing. So be very careful here in terms of entries and exits. I believe your best bet right now is to do a combination, a fade setup. This is no longer a trend, but it still has the trend that was influence, which is up. Look for a Darvis, look for a stochastic. Let's see if we can't get down. I mean, I think we're in an interesting price zone now. I'd like to see this stochastic get to about 20 on DVN before I do anything. And remember, we do have options expiration, so we might see some volatility. And maybe Monday might be a better choice. And Occidental is the same thing. Was a beautiful trend, flush in the broader markets, dragging down XOP, XLE, OIH, FCG, and the stocks within those sectors. By the way, those are 3 oil stock, XOP, OIH, XLE, and then natty gas, getting drugged down despite the stability in the commodity. So what do we say here? Same thing, Stephen. Slow stow, use the Darvis. By the way, gang, we have a free Darvis tool over at countdowntrader.com. We have by the way, we have the premium version included with the class for those of you that may not know. So I would wait for more confirmation from the slow stow. And by the way, Stephen, Occidental is a little bit further along that path. So use the Darvis for the support layer, use the slow stow to signal when we've reached, likely within the context of this bullish chop, where that turnaround could happen. All right, next up, what does anchoring mean? Is this something that is done manually or automatically by the platform? So Scott, we actually anchor a lot of indicators. If we have a 200 period simple moving average, it's sort of anchored 200 periods back. It rolls, of course, but it's anchored 200 periods back. So when anchoring is applied in the way that I discuss it, it's usually applied to volume tools. What's the date or what's the time that we are asking the indicator to calculate forward from? That's what that means. And is it done manually? Yes, I like to have it done manually. But when I say manually, you bring up, say, a VWAP. And I will always have a couple of different anchors. But for example, one of the steady anchors I like is either 7 a.m. Eastern or 9:30 a.m. Eastern. So once you set it, you're just asking the VWAP to reset every morning at 9:30 a.m. Eastern. And from 9:30 a.m. Eastern forward, you start to recalculate that volume weighted average price. So I don't automate that, but once you've told the indicator, hey, anchor from 9:30, you're done. So you have to do it once. So I guess kind of it's automatic once you tell the indicator, hey, this is where I want you to study forward from. So thank you for the question. All right, next up, Relux asks JOAN. Okay. Can't say I'm familiar with this one, but let's see. Open interest under. Yeah, you know what my issue is mostly is the cost. So anytime I'm going to look at something under 10 or 20 bucks, it's really a volume conversation. So all the technicals, awesome analysis, awesome breakdown. I'm generally speaking going to be bearish. But look, when something's $8, I got to look at where the point of control, value area high, value area low, and volume ledges are. Because under $20, there's a tendency to start to see these rips to the upside because of the cost. So yes, I would normally say, hey, let's look at a short. But I'll tell you what, we've got a 1, 2, 3 here that broke out through basically $8.80, $8.78, that area. So I would look for maybe the 1, 2, 3 to move up and retest the 200. I don't know anything about Joan. I don't know anything. JOAN. I don't even know what stock it is, to be quite frank. Easy enough to remedy that. Look it up and see what ETFs it's a part of, but that's just a pure technical breakdown. Okay, thank you for the question. I'm not able to day trade the US session. What would I trade after hours? Okay, so Bob, if I am looking at, and that's a great question. I think that came up quite a bit in last night's webinar, and I will absolutely address it in Wednesday's 8 p.m. webinar. We'll have a very active, fun Q&A. So there's 4 windows. So if you're not able to trade, you can look at the close, but I probably wouldn't recommend that. It may not be realistic, right? So the next window would be the Asian session, and the window before that would be pre-market. So the trick isn't, look, it's not that this session, the 2-hour windows are any super secret. They're not. What the quote unquote secret is, if there is one, is understanding the volatility for those 4 distinct windows. So yes, the HPMRs are going to be a big part of that, but also having a general idea of the behavior of the market during those hours and who is actually awake and trading, meaning which economic events am I going to have to be aware of if I'm trading, say, 7 to 9 a.m., 8:30 hot zones? What if I'm trading the Asian session, which starts around 8 p.m. Eastern? which economic events, what's the typical price movement range from say 8 to 10:30. So there are 3 others that are fairly realistic. So if the US session, the entire US session's out, I would focus on the Asian session and maybe pre-market US session. So I hope that makes sense. Hope that helps. All right, tips on day trading options expiration day. Julian, I don't do anything special for options expiration. I just know we're going to see a ton of volatility. It's a caution day for me. Here's the tip. Go half size. Be more conservative. Be especially aware of open interest levels. Be aware of major psychological levels, which is oftentimes where open interest is going to be heaviest in the options. Think about what options expiration means and look at where the size is at. This is where size is still going to be a big part of the conversation. Be prudent. That's my tip. Be cautious because it is going to be tricky price action. SAVE. SAVE. You know, if it's not an uptrend and the trend that preceded it was down and we're below the 200. So I'm really not a big fan of trying to find a relative outperformer within jets as it continues to jet to the downside. So be very careful there. We're still on the bearish side of that equator, that 200 exponential. All right. Okay, next up is, and yes, again, a reminder, if you have, we have a replay link. So thank you to learn about the webinar from last night. A lot of Q&A, a lot of explainers on what it is to understand volatility, underlying market structure, my preferred tools for day trading, simplertrading.com, price-replay. Very cool. All right, next up, PSX is the only green boat in XLE and sitting at the bottom of the wave. Yep, so let's pull that up. In this case, what I would have to say is that if we can get an inside candle or a minor low, looks like it's going to be more of an inside candle. If I can enter not much higher than about 98, that would be fine. I don't want to be getting long with a ton of bullish momentum. So as long as we're below the halfway mark on the open and I want to build a small, say moderate position, that would be fine. I would say yes, that would be fine. But just be aware of the action within the XLE. Be aware of what's happening in the group of stocks that PSX is part of. And I know you are, David, because you plucked PSX out as a relative outperformer. Brilliant. But just be aware, if XLE continues to head lower, it's going to drag PSX with it. So good eye, but be aware of that. All right, next up is the green for the trend mean the 34 has sloped up below the slower moving averages? Joseph, it means that the alignment of the 4 that I use, 8, 13, 21, 34, is bullish. And so if we have a bullish alignment, it has as much to do with the 8, 13, and 21 as it does the 34. So when the 34 is acting as good support, part of the calculation is the 8, 13, 21 have to be also organized and moving higher as well. That's what gets that to go green. That's what gets that trend to go green. Yeah. All right. Had a great run with UUP. We did, didn't we? I mean, Jim, yeah, we had a really good run as well, UUP and FXE. I want to do it again, by the way. I absolutely want to do it again. We're going to key that up. Cashed out yesterday, over 300%. Brilliant, Jim. Very nice. Nicely done. Am I still bullish? Yes, I'm still bullish. Macroeconomic trend is still the wind at our back. Overall uptrend has re-engaged after a brief period of chop through the end of May to the beginning of June. And yes, we're back in buy the dip mode, which means that we're back in sell the rip mode on euro, pound, and yen. So UUP is in play. FXE is in play as well. So good stuff, Jim. Well done. Really nicely done. I love hearing stories like that. Mike, What are my thoughts on Go? All right, let's take a look. I entered on Tuesday with the inverted hammer, but entered based on 13, 21, 34, 55 being stacked. And in a squeeze, is a target of 42 reasonable? Okay, so this is a buy the dip for me. This is straight up a buy the dip. So let's talk about the timing just for a moment. This entry triggered on 6/9. So that would be last Thursday. So on 6/9, that's a double green buy the dip and at the Darvis. So my perspective of when this was buyable is specific to that day and that bearish momentum. But as far as, let's see, I did not log into my trading view quite yet. So let me do that here real quick. And then I can give you an answer about a target a little bit more accurately, because what I am curious about is whether or not we have any volume ledges up in that area. So let's do this. Okay, so this is GO. Open this up. And well, I don't have a lot by way of volume ledges, because getting through the one at around 40.38, 40.50 would be the first task at hand. Then look at the Darvis here around 42.30. So you're asking, is 42 a reasonable target? If we can get through 40 and a half, I'd say yes, 42.30, 42.20 is very reasonable. Yes. And that's how I would determine it. And the path of least resistance is up because the structure is still quite good there. So nice. And then again, just to reiterate, I don't know about the other setups as far as what was stacked, because I don't use the 55. I use 8, 13, 21, 34, but we're probably in the same vicinity of structure. But the 9th was the day of the setup for me, and then 42 is a target. Yeah, I think it's quite reasonable. Yes. All right. Next up, AR. Is it still a trend follow? And the answer is no. However, it's still bullish. You can be bullish and not have a trend, right? You can be bullish and not have a trend, and that's pretty much what we're looking at here. But that simply means, though, we transition to an oversold buy approach if we can combine an oversold stochastic with a Darvis zone. That's really what we want to think about there. So the 55 could be in play. It's been almost in play before, so it could be. But I would be a little bit more patient. And I would try to find stocks within XOP that might be at Darvis support and say a 20 level, the low level on the slow stochastic. All right. So thanks for the question. Let's see. Next up, how do I manage my longer term retirement account in this environment? I go shopping. The only thing we can do is, again, with the pullback we have, I'm not going to liquidate at the lows. Look, there are two things that retail investors tend to do. They buy at highs and they sell when the market's going lower. And while I will not call big money smart money, the thing that they do that is smart is portfolio managers, hedge funds, professional money, big money, if you want to call it that. They don't buy at highs like retail traders do. They don't sell when the markets are heading lower. One of the things that I am widely anticipating is just how much money is ready to go to work as it did in May, once again in June. I do think we could see more money go to work on this sell-off. So what am I doing in this environment? I'm going shopping. I'm looking at the weekly time frame. And by the way, in the Sector Secrets Mastery Gang, it is the All Things Raghee room. And after this upcoming class, it is going to continue and to expand to be the All Things Raghee room. What does that mean? I'm looking at a schedule where we're going to be doing more day trading in the morning, or more discussion of short-term time frames. We're still going to do our swing trading, our daily time frame setups. And then once a week, we do our macro market deep dive every Tuesday between 3 and 4 p.m. Eastern. We take a look at the macroeconomic factors. And then once a quarter, we revisit our longer term positions, our longer term portfolio. So regardless of what time horizon and time frame, we do it all in that room. And that's really always been one of my goals, is to have a room where people know what I'm doing both short and long term, and being as transparent as possible with that. So right now, what I'm recommending to them is continue to keep an eye on the weekly and continue to look at things like the 200 propulsion and the structure of those weekly timeframes for entries that we could start to put in our portfolio. So in this environment, I go shopping. What are those levels that I wish I could have gotten my hands on even 5 or 6 months ago, or even a couple of years ago, that finally now are looking really, really good, like Amazon, like Apple, right? Like some of these sectors, XLK, XLC. So there's a lot to like. Building a portfolio isn't about buying as it's moving higher. It's about looking at when things are on sale, what is a good value? What is a good technical level at which I want to add something to my portfolio? And so I look at this as a great big sale. Not because we may not go lower. Of course, we might go lower. But remember, our time horizon minimally is 6 months and ideally a number of years. So I'm not going to think that I'm going to buy the low ever. But if I can buy something better than the chuckleheads chasing highs, right, my friend? Awesome question. Then I'm in a good timing window to start to buy things at a better bargain than chasing things when they're parabolic and up, like 2019, 2020, and some of 2021. All right, gang. So that's it. I got to get on over to the futures room and the Sector Secrets Mastery. I'll see you all there in just a few moments. And thank you as always, gang. Thanks for showing up for our Caffeinate and Dominate pre-market show. And I will see you all on Sunday. I know we have a holiday on Monday, but we're going to still get ready for the week on Sunday. So I'll see you all 6 p.m. for the Sunday show, our Sunday live show, market week preparation. And again, it's options expiration. It's a caution day. Be cautious, right? Stay opportunistic. Watch that video that I cut from last night over at the Simple Trading YouTube channel that talks about the different ways of looking at day trading, the daily time frame, and the weekly. Okay? Be good to each other, gang.